Good morning, traders. It is Wednesday, the 16th of June, 2021. Thanks for joining me again this morning on our Tradeabyte number 2015. 2015. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. Let's hop right into our pre-market summary sheet from Convergent Trading. As we can see here, the market posture is mixed this morning as we come into FOMC day on rollover and expiration week with quad witching Friday just 2 days away. So overall, the market has been very, very quiet overnight. We've got 9 points or so of range for the entire overnight session. The inventory is about 47% short so far. And again, the profile is completely balanced right now. So if we look at what's leading, what's lagging, the laggard this morning is, other than the cryptos, which are in their own category, the laggard today is the Russell 2000, followed by the DAX. The leader today is silver. We see that the NASDAQ is relatively strong versus yesterday's settlement, up 0.18, 0.19% live. But the rest of them are pretty much flat to down. Euro Stoxx 50 up 0.07%. The S&P is basically unchanged, up a point. So we're opening in this condition where the market is just sitting sideways. I'm not going to dwell on this. Again, the overall posture is mixed coming into FOMC. Today is a great day to keep the powder dry, keep your bullets chambered, and to be prepared for the FOMC. The FOMC, we're going to be looking for the FOMC to talk about how they're going to respond to inflation. This is going to be very, very important today. Be sure that you're available at 2 p.m. Eastern U.S. time to hear what Fed Chair Jeremy Powell is going to say about how they see inflation. What are they going to do with liquidity, just the monetary supply, and the purchase programs and things like that. So we're going to look for the announcement at 2 o'clock. And probably more importantly, we're going to look for the press conference and the comments at 2:30 today. So be sure that you're available during that time. Heck, you should just go back to sleep until that point. I would think, well, I'm just kidding. I'm not going to tell you what's going to happen because I don't know. But it certainly would be a relatively quiet session this morning is what's expected. So that's where we stand today. We got crude oil inventories at 10:30, the FOMC decision at 2 Eastern U.S. time, the FOMC conference, the Fed conference at 2:30, and China's house price index at 9:30 this evening, and that will be that. So in terms of what was expected yesterday we were looking for the market to dip down into the 38, at least the 38 for the single prints, if not 35, back to Friday's close of last week. That's what this is. This is 35 right here. We were expected to open somewhere around 50. The market actually dropped a little bit before it opened, but overall, scenario one was looking for responsive selling towards a 35. Here's what actually happened. So if we remove some of these lines here, we open up and immediately sell off. We're completely responsive this morning or yesterday morning. And we continue to sell off all the way to the tick to the prior point of control, 28.75. We went to 28 and a quarter. Then we bounced out and remained sideways for the session. Ooh, my allergies are kicking in. not very timely. The roll is 98% done or so. So the roll is, we kind of need to set the roll aside. 1 second, I'll be right back. Excuse me. I'm getting a sneeze attack here. Unfortunately, not, excuse me, not very timely. Not very timely. While I'm at it, I might as well remind you that today, 1 second. Today at 4:30 Eastern, I will be online in a live broadcast. One more second. Sorry, I'm having a sneezing fit over here. Again, very untimely. Today at 4:30 Eastern, I'm going to be online for a public webinar to discuss building an edge in a new product. So looking at a new product and what goes into figuring out the data we need in order to trade it. Ooh, these sneezes. Register even though you may not be able to attend so that the recording can be sent to you. You can register at go to ct.pro/new-product-edge, all lowercase. The URL is available in the description on the YouTube video. It'll also be dropped into the live chat here on YouTube as well as on my Twitter feed. Ooh. Boy. Can't even, anyway, all right. I'm going to disappear for a bit. Okay, so what we were left with yesterday is an excess down into 42.75, really 43. And overall, we built a balance zone right on top of last week's close, right in line with the balance that we've had here recently in the 35 region. We're building a nice little belly there, right on top of settlement. So this is where this stands. My goal actually has been to cut these trader bites to 15 minutes and to just press through and let you guys go in 15 minutes. And today was the first day on that objective, not doing so well. Here's what's happened in the overnight session. The overnight session, I'd have to zoom in here. The overnight session completely sideways, and we are completely balanced right on top of yesterday's close. The overnight point of control has been created right at 37.50. Settlement is right in this region at 36.50. And we are trading right on top of the full session mid, full session VWAP. So overall, market's in a completely rested condition, sideways, completely balanced. Again, FOMC is in play here, so there's not going to be very much to look at until the FOMC gets released, and then I'm expecting some volatility as the FOMC gets released. So what are we looking for in terms of targets and things like that? Hang on. Sorry, I have to pause for one more second. There we go. What are we looking for? If the Fed comes out and says that they are concerned about inflation, we're probably going to drop into 42.19 and 4200 relatively quickly. The next big area of balance is really 41.95, 41.90. That's where I'm expecting it to go. If they come in dovish again, which is likely because that's what they do. They get paid to be dovish, to increase value for everybody, to increase valuations, to make those invested in the market more wealthy. Then we're looking at 42.56, and then that zone between 56 and 66 becomes key. The multiple measured move targets up there. So if the Fed comes in and they are a little bit bearish, we're looking at 42.19 immediate, really 4200, the composite low volume node, and 41.90 and 95 become key target areas in line with the 20 simple moving average, daily simple moving average, RTH only. And that's what we're looking for there. In terms of the order flow and what we have in the market, we have an offer, a large offer at 42.45, pretty big block there, about about 350 or so out of the 473 offered as a block. The 50 has some size in there, but not a big block. And then we come into this. This is the region right here. This is the region that's the target to the upside, 59 to 64. This has multiple measured moves going into it. This is the area we want to pay attention to if the market starts to rally. Below, again, not much there, but don't be surprised if the market comes in and sells off early from balance, as it's done over the last few nights or openings, and then for it to turn up. Later in the session. Not seeing much in the order flow on my order flow chart here. By the way, I don't know if any of you are using Edge Pro X, but today we're doing a walkthrough. I'm going to be hosting a walkthrough at 1 Eastern with Giancarlo Saracino from EdgeClear. It is the weekly Edge Pro X walkthrough that he does, but I'm going to be joining today to show how anyone with Edge Pro X can import these layouts into their platform and to use them. I'm going to import these layouts so you have the same thing that I'm seeing minus the stock zone levels because they're proprietary to Convergent. I'm going to show you how to do that and what all the pieces are and how to use them. Overall, when we're looking at the value migration, oops, gone back too far. Now it's got to compute all this volume. Value migration has been to the upside, and more recently it has sat sideways. And we are completely in balance currently. So if we look at how value has been migrating, let me turn off. Let me hide these fractals here. So when we look at this, the migration of value, you could see how it's been developing, right? So these last few profiles, boom, boom, and it's starting to rise slightly, rise. So we've done a good job of balancing, rising, and then now we are balancing again. See, we're building these profiles on top of each other. So you could see there's a slight positive skew as we climb higher and higher into 42.50. And then we are sitting completely sideways coming into the FOMC. So the market's compressing, consolidating in anticipation of FOMC. Look at how tight that this arrangement is this morning in terms of what the market has done. Yesterday, we did see, when you see white on top here on the relative delta indicator, relative volume indicator, this is expected volume is the white, blue is the actual. despite the rollover, volume has been pretty poor. Yesterday we had 764,000 contracts in the RTH session on rollover, which is pretty bad. There's just very, very little participation, and we're seeing the same thing this morning. We're seeing the white bars. This is a 20-day average or mean per bar. This is a 15-minute chart. You can see that there are a lot of white bars peaking. I want to see that everything is blue to show us that volume participation has been pretty strong, and it has not been. From a market profiling perspective, we see the same story, right? Value, value, value. There's a slight migration in value yesterday, but we had an inside day yesterday. We missed the high by a couple ticks. So yesterday was an inside day coming into FOMC, and this morning we've built value in here. This is very much coiled to move one way or another. Let's move into what's expected for today, and I can let you guys take off here in the next 2 minutes. Okay, so what are we looking for today? The biggest thing we need to make sure we remember is that the FOMC is today. So let's put our imaginary line up for the FOMC. Yes, that's a slanted line. FOMC. As I said, there are two events today. 1 o'clock, I'll be going over the layouts, the new layouts and new features, the updates, the functionality improvements in Edge Pro X in the Edge Clear weekly walkthrough. And then after the close at 4:30, we'll be talking about what we need to look at in order to trade a new product, futures product. This morning, completely sideways, looking for this to get tangled within the overnight point of control. Full session VWAP, full session mid. There's RTH VWAP mid in this area yesterday. There's a lot going on overhead. I'm expecting it to be sideways, and then I'm looking for it to migrate lower and just be drifting back and forth. The FOMC comes in, and who the heck knows what's going to happen. Overall, the market's banking on inflation being transitory or temporary. But if there are signs that that this inflation is not transitory, that the labor supply is still a problem and wages need to go up, that is a more permanent type of inflation, and the market's likely to respond very negatively to that. Inflation is basically a tax on the entire economy. And causes a drag to earnings and everything else. So this is it's just a function of what the Fed says. I don't even know why I'm drawing the second scenario. The second scenario is an open auction that pushes towards the where we started from yesterday, taking back everything above the 43.44. And then consolidating back into the FOMC. Same scenario, could go either way. What's important today is not to commit to any trades. Don't commit to any trades. You wanna take your setups. You wanna cut them loose as quickly as you can. As soon as the market, it's evident that you're wrong, and that is through your stop or whatever you're using to enter. The entry criteria has got to weigh into the exit criteria. But keep your powder dry and make sure you have ammunition for when the FOMC comes. And remember, the FOMC and big announcements unfold in 3 waves, right? We have the algo wave. Let's assume it's up. We have the algo wave. We have the response. Those voting in the other direction. And then we have the real move. And the real move is where we're looking for that reversal. And that could be something like this. Also, I'm not automatically assuming that it's going to go higher. I'm looking to trade wave 3. So don't burden yourself with the idea that I need to respond as soon as the announcement comes. Relax. It takes about 2 to 3 minutes to figure out where the SOC is and to figure out where we are versus the SOC and to trade away from it once that third wave kicks in. Okay, Good luck, and I'll catch you this afternoon, either 1 o'clock for the Edge Pro X walkthrough or 4:30 for the public webinar. Take care.